Good morning, everybody. It's Stephen Williams, founder and president of the creditrepairshop.com. We got some good stuff this morning for you. It's concerning the Credit Karma fake scores. You've probably seen it on TV. It's been a lot of articles online, a lot of posts online from people stating that the scores are just not matching when they went to go get a loan. Different scores were, the scores were different than what it was showing on Credit Karma. Well, I have the answers to you on here, and I've talked about this since Credit Karma came into when TransUnion opened up Credit Karma, that I saw a problem with the way that they were putting that together, because it was mainly an abridge. But so we're going to talk about Credit Karmas. Are the scores fake, or are they real? And we're going to talk about underwriting. One of the biggest reasons why scores could vary from any monitoring service that you have when you go to get a loan, the real reason, and also about the relationships between lenders and the finance manager. Like if you're going to get a loan with a mortgage company, the person that is actually writing your application has a lot of power also on getting you approved, and I'm going to talk about that. And I'm going to talk about my scores. I had looked at Credit Karma because I got Credit Karma just to see what it would look like when I did it with a monitoring service that I'm paying for. What are the differences on the scores? And I'll talk about that too. So first, let's start with Credit Karma. Are the scores fake, or are they real? The scores technically are fake, and the reasons why they are fake is because they do not figure the scores based on filters for underwriting, and also they state in their terms that the credit scores that they're put on Credit Karma is basically used with a different formula than that is used even on the TransUnion website. And that is just totally different. And I don't know why, but what I've seen also is that it catches up. Like, it'll show a different score, and then it'll catch up to be close to that score. And I think that it's mainly because that site, when it was put together to be like an abridged site. Abridged means that it is an advertising site. It is to bring people onto a website, and then they're going to abridge it by having advertisements on there, and that's what's going to pay for the whole business. That's what's going to pay for Credit Karma. People have seen on there 40 to 75 point differences. Even myself, I've seen on Credit Karma, where on my monitoring service that I pay for, and then Credit Karma, I've seen 20 to 40 point differences on there at different periods of time when I was using my credit. But people have also talked about it. I was looking at one post someone put, and they said that they score was 70 points different, but they didn't complain because it was 70 points higher when they went to get their loan. So they were just basically thinking that the website is just put together, they throw scores up, and they just want to mainly get you looking at the advertisements. So we've seen them both ways, where the scores have been lower. We've seen them where scores have been higher. And that's actually been the case with me, where the score was actually higher with my monitoring service, and it was actually higher when I had went to look at having a loan for something. The score was higher. Now, so just so you understand it, Credit Karma is just like, in a way, a Facebook group. It's just like a group. They want to bring people in. It's free. Everybody have fun. Everybody know their scores. Everybody get to look at all of this stuff that you usually pay for, but they're slamming you with advertising. That's where they're making their money. There's always going to be credit card offers, mortgage offers. It's just a big data pool, and they're selling, have another revenue stream of selling advertisers on their website access to more people and more people's data. Now, one of the things that I've seen, and I don't hear too many people explain this on YouTube or on other websites that talk about credit is that there's a filtering system that every lender has, and this could be where you know that you have a solid credit score, and then you go to get a loan somewhere. And I usually see this with mortgages, where you'll go to get a mortgage and all of a sudden your scores are lower than what you know, they're saying that your scores are lower. And they always say, well, we get all three scores and we do an average and stuff like that. But some of the time people look at it and they say, well, even with the averages, my scores are not what my three scores I see on the monitoring system. It's not, that's still not the average of the three that I see. And the difference is, this is what the whole difference is that they use filters. So when a mortgage company signs up to pull data and credit reports from the three bureaus, they don't just say, well, we want to just pull data. We want to pull data, and we want to have our underwriting. We want to have, in a way, a robo underwriting filter in place, that if an individual is married, or if they're single, if they've been on a job for a certain amount of time, all of these different things, the things that you've been filling out on your application that was done by a human, where they said, have you been at your job for 2 years? Have you lived your residence for 1 year or 2 years or 3 years? Do you own your home? Do you rent your home? Those are all filters that lenders will look at, and they will contribute those filters to a risk factor that they have built in. In the good old days, everybody always say, in the 2000s and 1990s and 80s and before, humans would make that determination. They would look at your application, they would go through their manual underwriting procedures, and they would say, okay, this person could qualify for this loan based on this, and we're not going to take points away from them just because they're divorced or they're single, because other parts of their life have been going well. They paid all the stuff on time, have a good job, been stable, so we're not going to take points away from them. But now with the automatic, or the robo, so to speak, underwriting procedures that are going in, they're automatically built in. So when a human gets the application and gets the information, they're thinking that they're going from ground zero, so to speak, of just getting information from the bureau. No, the companies have already put in filters before it even gets to the person that's going to be signing off on the loan. A lot of the people in those positions don't even know it. These companies have put things in place to where if any time, if they didn't need a human, they would just get rid of the human and be able to approve loans without even having to have someone sit down and do any paperwork. Trust me, and that day is coming very soon. So they have these filters that they give the bureaus and say, if it meets any of these criteria, we want it to be 100% where nothing gets changed. A robot isn't going to put, a robot or a program isn't going to put their own human touch to it, so to speak, or any prejudices or anything. It's just going to be like, this is what the data is, and this is what the data is going to output. Data in, data out, without any how do I say, attitudes, or came to work with a problem with the family. No, computer isn't going to do that. So what they did is they put automatic filters in at the bureaus. So when they pull data, they automatically filter out for those things like time at job, rent or own their home, children, divorce, college. All of that stuff is filtered in automatically, and they will start to either deduct the points off of your score, or they will leave it the same. And I've even seen in cases where they have the approval, if you're on the borderline, to actually increase your score or to approve it even though you're on the borderline. And these are called filters. And a lot of lenders don't know about it. They just say underwriting is going into underwriting. Most underwriting right now is done by computers, and a human might pull the paperwork off the printer and sign and say it's approved or disapproved, but everything is based off of the filters and off of the automatic underwriting procedures. And if anything is, now they may have situations where people that have power in the lending fields, they can approve things, they have relationships, and that's what goes into the next thing, is that finance managers can have relationships with people. And I remember years ago, I think it was probably about a little over 10 or 11 years ago, I went and I purchased a vehicle from a Land Rover dealer. And at that time, my score, one of my scores, that they only use one score to for the vehicle. I think, I don't know if it was TransUnion or one of. Usually the dealer will use one score. They're not going to use all three. They're going to use one, and the one that they use happened to have my score under. It was like six at that time, 699 at that time, and I remember the finance manager calling the lender that was going to loan on that vehicle, and he said it's under 699, but we want to be able to get them this percentage rate. It was a 2.7%. The difference between being under 700 was going to be at 4%. Being over 700 was 2.7%, and that's a big difference when you're talking about a simple interest loan. And he made a call, relationship, person to person, got the deal done, 2.7%. So in certain situations, depending on what type of loan it is, finance manager and the lenders, they have relationships and they can make a call and make a deal go through. I've seen that happen. And then also with Credit Karma, they did disclose, if you look at their terms when you sign up for Credit Karma, they do disclose that this credit score is not figured the same way that any underwriters would figure it, any lenders would figure it, and even the way that they figure it on their other website. They disclose that in there, and they make you sign that you're going to be getting a lot of advertisements in exchange for getting the services that they provide. So they do disclose that. They're not hiding that. It's just that most of the time we don't read those small disclosures. Now, closing out in the video, I want to talk about my Credit Karma score. I checked it, and I use another one, Service Pro Credit, that I had from a long time ago. They don't sign up any new customers right now for some reason, but I looked at my score versus Credit Karma, and all of them were in the same range. TransUnion on Credit Karma had me at a 751, and it matched. It actually matched. My TransUnion matched the Experian. Let me double check this here real quick. I want to just double check to make sure that this score matches up. For some reason, I didn't write that one down. For some reason, I didn't write that one down on there. I was kind of rushing to get started here, but let's see what we have. All right, let's see what we got here. I wanted just to make sure what the scores were. We have on the Equifax, and let me look at the other one here. The Equifax was off. Yeah, the Equifax was off on the Credit Karma, so they had me at a 763, and my scores go up and down 4 to 15 points every month, simply because I use my American Express card to pay some my business bills. I use that to pay the business bills and then pay it off every month. And so I'll see it'll go down 4 points and it'll jump, and then when I pay it, it'll jump up to 15 points, back into the 780s in that range. Uh, Even with the with the TransUnion, it's right now it's at 751 on both, and when I pay that bill, it'll jump that one up back into the low 770s or sometimes 780s, and but it is one there. It's matching 73. No, I'm sorry. It's a different score. So my Credit Karma is actually higher than with my other monitoring service that I used, and I did my refresh with my other one that I use, and so it's actually higher on here than it is on the other one. And then I'll do an update once I pay that American Express card before the 1st of each month, and I'll let you know what it jumps to the next month when it has that payoff on there. But in closing, the biggest takeaway on this is that with Credit Karma, they're not using the filters. Really, none of the bureaus or credit monitoring services are using the filter that an actual lender would actually use. And the reason behind that is because it's different with every lender. It's not going to be the same. Some lenders don't take away any scores. They just take what it is, what it shows with the bureaus, and they put it in, and they make a determination if they want to loan you the money. Other ones are going to factor in different things such as your age, your even the zip code that you live in. It could filter in time on your job, married, single, college educated, all types of things. They could filter that in, and just think about it. It's their money that they're lending out, so they want to make sure that they tell their investors why, if anything happened, why a certain amount of loans maybe went bad. They want to make sure that everybody followed the rules on loaning out the investor money. So if you have any questions about anything, post your comments. I love to answer those. Subscribe to my page if you haven't done that. Spread the word. Very good information that I put on here. If you need help, you can visit my website, thecreditrepairshop.com. If you don't have your credit reports and scores, I have a link below, your3scores.com. You can grab your reports and scores from there, and and then just make sure that you have a great day. Always think positive, and keep moving forward in life. Every day you need to take full advantage of every day, because today is important, and tomorrow never comes, because tomorrow will eventually be today for all of us. All right, thanks a lot. This is Stephen Williams, founder and president of thecreditrepairshop.com.